So you've got 1,000 euros, maybe a little bit more, and you're wondering what's the smartest way to invest in Germany. I've spent the last 5 years testing, researching, and even making mistakes to figure out exactly that. And today, I'm going to break it down for you. Here's why this really matters. Even small amounts, when invested the right way, can grow into something meaningful. For example, I once bought 120 shares of a stock at 0.94 cents. Today, those same shares are trading at 7.85 euros. That's a 732% increase. On 112 euros investment, I've made over 800 euros in unrealized gains. Imagine if I had invested the full 1000 euros. That would have been more than 7000 euros in profit. Sounds exciting, right? But here's the critical point. For every success story like that, there are dozens of cases where you can lose badly if you're not careful. And that's where most beginners end up. So in this video, I'll show you exactly how you can invest your first 1000 euros in Germany. We'll cover what to avoid, like why real estate isn't realistic with that amount, and what's actually worth considering from stocks to ETFs, crypto to precious metals, and even commodities. By the end of this video, you'll know how to turn your first 1000 euros into a smart starting point for building real wealth in Germany. By the way, if you're new to the channel, my name is Essen, and on this channel, we discuss how to build wealth in Germany. Now, one thing a lot of beginners think about is real estate. After all, it's one of the most common ways to build wealth. But honestly speaking, 1000 euros is simply not enough to get into real estate in Germany. Property prices are high, and even if you wanted to buy a small apartment, you would need tens of thousands of euros just for the down payment alone. Add to that the extra costs, notary fees, property taxes, renovations, and you'll quickly realize that real estate is not a realistic option for your first 1000 euros. And that's okay, because there are smarter, lower barrier ways to put your money to work. Maybe if you know a way to get started with investing with this amount, then let me know in the comments below. But I know for a fact that there are certain things that you can invest in. For example, you can invest in the stock market, you can invest in cryptocurrencies, you can also invest in precious metals like gold and platinum, and you can even invest in other commodities like oil and wheat. Here you might ask, Essen, isn't investing really risky? You are correct. Yes, it is risky. But not investing guarantees to keep you poorer decades from now. I'll share how to minimize risk later in the video, but you just have to look at the recent inflation to get the idea. I'm sure you've seen this in your own life. Your money isn't worth as much as it used to. For me, a trip to Aldi or Lidl was about 25 euros last year, and this year it's about 50 euros. So the effect of inflation is real, and you can see what inflation does to your money, which is why you have to invest it so that your money keeps up with inflation. And of course, if you do it right, it will also outpace inflation as well. In most cases, if you want to invest in the stock market, buy cryptocurrencies, or buy commodities like gold or oil, the first thing you need to do is open an investment account. This is where the sponsor of today's video, Trading 212, can be a game changer. Trading 212 is a truly commission-free investment app. Unlike a lot of platforms that sneak in hidden fees or make it unnecessarily complicated, Trading 212 offers a truly zero commission experience with no fees to buy or sell stocks or ETFs. Even in Germany, the setup is super easy. You can open an account directly from your phone, and the app is available in English, German, and several other languages, which is great for expats or anyone comfortable navigating in English. And here's what I really like about it. It's perfect for beginners. You don't have to jump in with real money right away. The app has a built-in paper trading mode, which lets you practice buying and selling stocks and ETFs with virtual money. So you can build your confidence, test strategies, and learn how investing works without risk. When you're ready to start with real money, here's the best part. Trading 212 is giving you a free fractional share worth up to 100 euros. If you sign up using the link in the description and use the sponsored code ESSEN, all you need to do is fund your account with at least €1 within the first 10 days, and you'll get a free fractional share worth between 8 and 100 euros. It could be a piece of Apple, Tesla, or something else. It's completely random. but it's yours to keep, and it's a great way to kick off your portfolio. Once you have an investment account, simply transferring money from your checking account to your investment account does not work. Now you have to buy investments, which is the interesting part. I remember as soon as the money I sent from my checking account arrived in my investment account, I opened the app to invest it. But it was extremely overwhelming. The app showed so many options: bonds, regions, investing strategies, industries, and trends. I was so confused, as I am sure you might be as well. However, when you're deciding where to invest your first 1000 euros in Germany, the first thing you need to decide is whether you want to invest the whole 1000 euros at once or invest it using a systematic investment plan, also known as a savings plan in Germany. With lump sum investing, you take the entire 1000 euros, choose your investment, and put it all in at once. The main advantage is that your money starts working for you immediately. If the market goes up, you're making gains on the entire amount right away. Historically speaking, lump sum investing tends to outperform spreading it over time because the market over the long run usually grows more than it falls. But there's also a risk. If you invest your full 1000 euros right before a market drop, you'll see your portfolio fall in value very quickly. That can feel painful and scary, especially for beginners. With the savings plan or the systematic investment plan, you set up an automated plan to invest smaller amounts regularly. Let's say 100 euros a month into your chosen investment. The main benefit here is something called cost averaging. If the market drops one month, you buy more shares at a cheaper price. If the market goes up, you buy fewer shares, but your existing shares gain value. This smooths out the ups and downs, making the emotional side of investing easier to handle. It's also beginner friendly because you don't need to worry about the perfect timing. Just keep investing regularly, no matter what the market is doing. This way, you can also reduce the risk of investing a large amount all at once. The downside, if the market rises steadily after you invest, you will miss out on some potential gains compared to investing the whole amount right away. Both of these options work very well. You can even mix both of them by initially investing a larger amount as a lump sum. For example, from your 1000 euros that you want to invest in Germany, you can invest 500 euros upfront and set up a savings plan of 100 euros each month. And then you can continue the investment plan. Once you figure out a framework that works for you, next we have to figure out exactly where to invest that money. But before we continue, please hit the like button if you're getting value from this video and consider subscribing. To simplify things, I'll divide the investing options into two. The first includes the stock market and commodities. The second option includes crypto. When it comes to investing in the stock market, you can buy single shares or buy them in bundles, also known as ETFs or exchange traded funds. Or if you use Trading 212, you can also use their buy function to essentially create your own ETF. Examples of single stocks include Apple, Microsoft, Nvidia, etc. Examples of ETFs include the S&P 500 ETF, the MSCI World, and the MSCI Emerging Market ETFs. The benefit of buying a fund or an ETF is that it gives you what's called diversification. This is quite important. By investing a tiny bit into a lot of companies, you can make your financial future independent of whether a single company does well. Because if that company doesn't perform well, then you risk your whole investment. But if you own a small amount of a large number of companies, you can be quite safe comparatively as the economy goes up and down. On the other side, single stocks do give you a high potential for growth if you pick the right ones. Similar to businesses like Google or Oracle, you can even buy commodities like gold and oil on the stock market. Again, as individual commodities like Xetra Gold if you are interested in buying gold on the stock exchange, or you can even buy commodities ETFs. For most beginners, ETFs are the safer option to get started. But there are a lot of different ETFs out there. So when you are choosing an ETF to invest in, you want to look at one that has low fees because each ETF charges what's called a management fee. It's a small fee taken in addition to your investment for giving you the convenience of owning all of these stocks in one place. This management fee is also known as an expense ratio. This expense ratio could be up to 2 to 3% and even higher. Anything below 0.5% is okay, but I would recommend staying away from ETFs that have an expense ratio higher than 1%. Ideally, an ETF with an expense ratio in the 0.0 something range would be perfect. Generally, funds or ETFs that follow a specific index have such a low expense ratio. These funds are also known as index funds. One of the most popular examples would be the S&P 500 ETF, which tracks the performance of the top 500 companies in the United States. There are other examples of index funds like Nasdaq, FTSE or MSCI World. These index funds have very low expense ratios as they track specific indices compared to actively managed funds where specialist fund managers pick and choose specific stocks to invest in. As people are actively managing these funds, the expense ratio for them is also quite high. Now here you might think, why not choose a fund or ETF where the stocks are picked by professionals whose job it is to do so? Well, research shows that index funds generally perform better than actively managed funds. So not only is the performance generally worse, but the higher cost of actively managed funds can even cut into your profits in the long run. You also have to take taxes into consideration as well. In Germany, there is a 25% capital gains tax on realized profits and an additional ETF tax on unrealized profits. That's why I like the PI feature with Trading 212 where this ETF tax does not apply. So let me quickly explain how to set up a PI in Trading 212. In the PI section, you can tap New PI, then you can add your favorite individual stocks. In this example, I am adding Nvidia, Microsoft, Google and Amazon. You can add whichever company you like, but make sure to add the stock which is listed in a German stock exchange to avoid foreign currency fees. Then you can set auto or manual investment. Set the initial and monthly amount. In this example, I'll add 500 euros as the initial amount and 100 euros per month. Then I'll name my PI. Once I am happy with the overview, I can fund my PI and start investing. Now coming to the second part, which is cryptocurrencies. Crypto investing in Germany can be quite interesting, but also very dangerous. Personally, I try not to invest more than 5% of my total net worth in crypto because the amount of fluctuations with cryptocurrencies is extremely high. The most popular crypto is obviously Bitcoin, followed by Ethereum and XRP. But a large number of crypto investors try to buy altcoins thinking it can make them rich overnight. For most beginners, it's not recommended to start with altcoins. Bitcoin can be something to look into if you want to get started with crypto. There are many other things to consider when it comes to crypto investing in Germany, which I share in this video. And don't forget to get your free stock with Trading 212 when you sign up and add at least €1 within the first 10 days. And I highly recommend that you watch this video if you want to get started with Trading 212.